Welcome to Fintech Insider Focus in association with Visa. Our once insular world of financial services is now a global phenomenon, and there are people everywhere opening up new markets and discovering new challenges like never before. In this strand of Fintech Insider, we take a burning question from financial services across the globe and put it under the microscope with explainers, expert panels, and in-depth interviews, all to bring the global community into focus. See what we did there. This month, the question we're posting is, will great user experience keep European fintechs ahead of their competitors? Now, there's so much wrapped into that question, so let me dive in a little bit. There's a lot to unwrap, and the letter's just UX for starters. The Interaction Design Foundation defines user experience as the process design teams use to create products that provide meaningful and relevant experiences to users. Now, this isn't just about a font or a drop-down menu. It's about much, much more than that. It's the entire process of acquiring and integrating a product, including aspects of branding, design, usability, and function. After the global banking crisis in 2008, there were lots of digitally savvy people let go from big banking institutions, packed with ideas about how to improve them, and have lived the negative experiences of them not being done as well. European challenger banks like Monzo, Starling, Revolut, and Wise were all born out of this industry shakeup, and were all making waves prioritizing UX. No longer was logging into your bank account online like breaking into Fort Knox. It was simple, effortless, and extremely popular. But now that we're more than a decade on from that initial wave of innovation, isn't it time that the big banking players caught up? Can they buy their way to top-class UX? And if it's not the big banks, then how about big tech players who are muscling their ways into financial services space with sleek design that they brought from maybe the original iPod or even the AirPods in that sense as well? The competition is fundamentally catching up, and the competition for the market more broadly is really heating up. We'll get into this and much, much more after a quick word from our sponsors at Visa. Visa's FinTech Fast Track program is streamlining the onboarding process for fintechs, enabling them to gain access to Visa's powerful capabilities and network. Visa and their enablement partners help fintechs launch and scale cards, virtual credentials, and disbursement programs. To learn more, visit partner.visa.com. Welcome back to Fintech Insider Focus. We want to take the conversation a little bit wider, so we put together a panel of experts to really dig into the question, will great UX keep European fintechs ahead of the competitors? First off, we have my Fintech Insider Focus co-host for this month's episodes, Emma Kerr, who is the SVP of Strategic Partnerships Europe over at Visa. Hey Emma, how's it going? Great to have you on the show.
Great to be here, David. Thanks.
Tell us a little bit more about your role at Visa. What are you up to?
Sure. So my team oversees three of our most critical stakeholder sets at Visa. First is big tech. These are kind of the global marketplaces that you know and love, Amazon, Apple, Google. Second is fintech, specifically across some of the key segments like crypto. And the third is really an issuer processing set of clients, which is not really well known to a lot of, laymen. But they are some of the best enablers of getting fintechs into the payment system and able to use cards and digital payments wherever you may be.
Very, very cool. Lovely broad role. That must be a very big sort of card you've got to hand out with all of that on, but it's a great role. Lots of fun times. We're also joined by Axel Cateland, who is the CEO over at Spendesk. Axel, thank you very much for joining us. I think people should know who you are, but if people haven't heard of Spendesk, what does Spendesk do?
Sure, and just one small detail. I'm the CEO of the financial institution that Spendesk holds, which is Spendesk Financial Services. And so Spendesk is a spend management platform. We offer card issuance and payments for any type of spend except payroll spend, which we don't touch. But any spend that can be done in a company, we handle it in a SaaS format.
Fantastic. I always love to give people a promotion there. So if I've just annoyed your boss by giving you their job title, then I do apologize on that one. But and last but by no means least, we have Vasily Starostenko, who is the head of product over at Revolut. Welcome to the show. Again, Everybody should know who Revolut are by this point, I imagine, given a global audience still. But what's a Revolut when you're at home?
Thanks for such a great introduction. I'm not going to tell you about the company a lot. I'm going to assume that most people know about it, but roughly and briefly, it's a digital bank. It's a digital financial services company, to be more precisely, because we do more than a banking. And the vision for the company is, again, to build a super app and to have all-stop shop for all kinds of financial services, whether you need to buy a stock, whether you want to make a card payment, or maybe you want to make a utility payment of any kind. My role in the company is leading a team, or if you will, a team of teams that exists to deliver the absolute best customer experience. And the topic of this podcast is user experience, UX. I want to, again, specifically differentiate. CX, customer experience, is a very similar term adjacent to UX, but slightly broader one that includes digital experience, physical experience, regulatory experience, all kinds of customer experiences. And three specific things that, again, those teams are driving. One is all sorts of questions people have on any topic: how to use products, what can I do, I am having a bad day. Like, it can be anything that comes from customers. Second is more specifically experiences which put your financial well-being at risk. Someone is about to steal your money, chargeback is needed, some questionable scam offer is being sent to you. And then the last but not least is a set of internal tools. You know that banks and financial services companies need robust and functional set of back office systems to be used by internal employees, right, to help customers. So those are the things that teams that I run are overseeing to ultimately deliver the absolute best customer experience.
Very good, very good. Another busy role, like you three. Like I don't know how you've got any hours left in the day to do podcasts. But all right, just before we get into the show then and dive in a little bit further, just a quick reminder for all of the listeners: the views and opinions on our panel are their own and don't necessarily reflect that of their companies. They might do, but they'll have to say that specifically if they want to. And don't take anything that you hear as tax, financial, or legal advice. Probably do your own research. Should be very sensible. Talk to somebody far smarter than me to get those things. And with that note, we probably want to get into the show. I mean, Emma, if we start with you, what is Visa's perspective on UX? As you heard from Vasily, the UX, CX, product, like there's a wealth of terms kind of around this space, isn't there? But what's your perspective on UX, specifically when we talk about financial services?
Absolutely. So Visa's in a bit of a unique position in the sense of it's a B2B company, but with a consumer brand. So our challenge has always been, like a lot of B2B companies, how do you have influence over that user experience when you don't actually own it or control it? And I think over the last several years, the company has been through a huge transition of not starting with feasibility and viability, but ensuring that there is desirability from a consumer standpoint. And so because we operate in that B2B space, we use a lot of co-creation and human-centered design with clients to co-create something that consumers hopefully want. And we do that using, being very informed by data. So just as an example, in the buy now, pay later space, when we've co-designed with partners, we find that consumers are often confused by interest rates when they're presented at the checkout. But their likelihood of accepting a credit product at the point of sale increases by about 25% when presented with a flat rate. They enjoy the certainty and kind of the clarity around that. And so that's kind of one of the nuggets of insights that we then take to work with our partners to ensure that kind of best UX gets embedded, across the ecosystem.
Yeah. I mean, it's fascinating, isn't it? And obviously, I mean, this podcast is called Fintech Insider. Like, fintech was born as a frustration of the status quo. I mean, Vasily, coming to you from a Revolut standpoint, I know, the conversations we've had with Nikolai before, but equally, I mean, Tom at Monzo and Anne at Starlink, the boom of fintech, the beginning of that was very much out of, really disappointment with the status quo, and therefore, a need to really sort of move things forward. So do you think fintech, particularly in that sort of post 2008 world, feels like a long time ago now, doesn't it? It's aging us all dramatically. But do you think the fintech hold on better UX was really a thing that they could really own? Was that the differentiator, do you think?
So I definitely do believe that second time the companies are approaching the same set of problems better, right? We've seen the similar situation, I would say, in a dot-com boom and bust back in 2000s as well, right? Where the set of problems is kind of not new that we're dealing with today, right? People need groceries delivered, they need safe and inexpensive rent, they need money to be managed, etc. But the approach and the quality of experiences that you build is what is changing, right? And I would say back in 2000s and pre-2008, there was often a naive approach. Often this approach is characterized by build it and they will come, just as long as you do the right thing, things just going to magically work out. And then after the initial bust and kind of sobering up, I would say the second attempt is usually characterized by being a lot more practical and keeping yourself grounded to the actual customer experience, actual customer needs, and just not saying that, hey, we're going to build it. As long as it's more awesome than the awful experience that you had historically, things gonna magically go right. Well, that's a mandatory and important factor, but unfortunately, it's not enough. So to make it closer to what's enough is you have to listen to what the customers are saying. You have to listen to what the government is saying again about the future, about the current, the regulators. Like, it's a lot more multifaceted approach with a lot more complexity. And if you let me again, the last bit, like at least the way I define customer experience, which is a very loaded term and very hard to manage, right? And you cannot manage things you do not define appropriately. So 3 key pillars I defined for myself and for my teams is, one is delightful. So, and that's table stakes. People will not use financial services apps, especially from challenging companies when they're big banks, unless those experiences are delightful, right? The delightfulness is just a table stakes. It's your foot in the door, if you will. Again, absolute must, but not enough. Second one, and don't think second is less important than the first, but second one is clarity and precision. And what I mean by that is money is a different experience. Managing money is different experience than, again, managing your free time, for example, right? If you go to YouTube and you start randomly tapping on different videos, okay, maybe you're not going to enjoy it the most, but nothing bad is going to happen. If you do the same in your financial services app, lots of bad things could possibly happen, right? So the clarity and precision is an absolute must from the customer experience standpoint. Clarity is everything we say is clear to you. Precision is everything you do is what you intended to do, and in fact is what's best for you. In some cases, you intend to do bad things, such as being subject to scam. Yes, and the very last but not least is efficiency. So it needs to be efficient because, again, as I compared it with YouTube and entertainment apps, people do not open digital banks and digital financial services apps to have fun. It's painful to manage money. We should understand that people just want out. They just want to pay the bill and leave. They just want to check the card number and leave. They don't leave to enjoy financial services apps, right? There are different sets of apps. So we live and breathe like building absolute efficient experiences subject to that they're delightful and that they are precise and clear. So that's my longer answer to your short question.
So I could not more strongly agree with that last point. And I say this all the time. Like, anybody listening to this podcast, you're weird. Like, you love financial services so much, you're listening to a podcast about it. Most normal people don't care. Like, they don't care about this stuff. It is to your point, Vasily, it's a pain point they're trying to solve. Nobody wakes up and goes, I want to do some more payments, or is like, I really want to transfer some money. Like, you're solving a real need for them in their life. And actually, to your point, if you can make it as painless as possible and aim for delight, then actually that's a very different thing. I feel like we should add to the beginning of the podcast the caveat, don't just open up your mobile banking and bang buttons as well. Like, it's another good ad, just in case anybody who's thinking about doing it, don't do it. It doesn't lead to a good outcome. But I mean, Axel, maybe coming to you on that one as well. I mean, is fintech defined by better experiences? Is that a thing you see almost like as a table stakes? Because Vasily's right, build it and they will come doesn't really work. But actually, you've got to have something better than the status quo. You've got to have something as an increase value to the customers to pull them towards you, right?
Yeah, and I would say, I mean, when startup started looking at financial services, which was probably, as you said, just after the big crisis, and I also wanted to mention, I also think that one of the reasons why European startups were quite advanced and we see a lot of European fintechs is we have to recognize that the European Union has been quite bold with the first directive that they launched, where they opened this payment institution and e-money institution statuses to break the monopoly of the banks and create some level of competition. So I think desperation from the customers and the open door from the European Union on innovation and getting the startup ecosystem into that industry was really what triggered. And I would say, when you're an incumbent, especially when you're a bank and it's very, very expensive to move, it's very expensive to innovate, it's very expensive to, because you have quite old systems and you don't have any external factor that triggers any change. And you also have, also something that was, I've worked a few years in traditional banks, so I've seen that from the inside. And because they also have branches and they have offices, so digital was not the default, was not the main investment that they wanted to make until startups and the digital industry came in through the startup that were created in the early 2010. And honestly, that indeed created a lot of increase in the UX and created a new industry, which the fintechs are all about. I mean, it started with B2C. We are somehow the second phase, because the B2B part was somehow a follower, because people got used to really good UX in their personal life, and it was a natural transition to include this improved UX when they manage money at work.
Yeah, no, I completely agree with that, and it's weird, isn't it, how frequently we all say regulation's so critical to innovation. But I mean, can you imagine saying that in 2006? People would have just laughed you out the room. But absolutely, it is an absolute cornerstone of why we're all here and why organizations like Revolut or Monzo or Starling or Vera or whoever are being able to do what they do. So, I mean, Emma, maybe coming back to you, I mean, do you think then that great UX in 2023 is kind of what keeps fintech ahead of the game in that sense? Because that's an interesting sort of point in itself, isn't it? Where financial services is not an island. The standards are being set by other industries really heavily. But is a fintechs maybe more capable of keeping up with the curve than more traditional players?
I think without a doubt, when you don't have legacy tech stacks, when you don't have teams of people that you would have to otherwise fire to make something else happen in another part of the company, the trade-offs that a fintech has to make are much, much lower to kind of have that next advancement. And so I very much think that because they built on leaner tech stacks that are, more consolidated, so you can make it one change and push it out to everybody, versus what I think has happened in the banking industry, where you have a lot of acquisitions over time and all those integrations take time. The fintechs will have, continue to have a bit of a cutting edge or a competitive advantage in this regard. That said, JP Morgan is the fastest growing app in Europe today. Banks have woken up to the fact that they need good UX to compete. It's table stakes now. And so, I look actually more at like the technology trends that have actually enabled fintech. So we kind of all forget that the iPhone only was released in 2008, relatively recent. And kind of the rise of the fintechs have used that as a way of having, a PC in everybody's pocket, and everybody can access their bank via that phone at all times. And what I'm going to be really curious to see as we go forward is how are things like ChatGPT and AI and ML really, what is the next technology platform that creates differentiation for fintechs and banks alike as some of those lines get blurred. And I think the other thing that we're seeing in the marketplace is you had all these neobanks start up a couple of years ago. Some like Revolut have, sped past the barrier, have done phenomenally well. You've got a whole host of others that are growing, but not maybe at the same pace. There may be more niche players. And then you have a lot of others that, probably during this next credit cycle might not survive. But that neobank area is pretty saturated. That said, where we see a lot of growth is in embedded finance. And so I think there's going to be all these new types of fintechs that spring up, not necessarily in your traditional banking, but within, kind of financial touch points across a consumer's life.
Yeah. Yes. It's fascinating, isn't it? I mean, pre 2008, the disruption in payments was still there, wasn't it? And actually, man, I'm really feeling old now. So 2006, 2005, we were seeing like real disruption in the payments landscape. But as you say, the regulatory climate then meant actually it could be everywhere. I would argue, if I'm honest with you, if you look at the barrier of entry, it's always the complexity of the place in which you're entering it. The beachhead has to be difficult enough to create some uniqueness, but actually beneficial enough to the customer that actually it generates a reason to be with you. If you talk to any of the the early founders of any of the challenger banks, retail banking's pretty straightforward, right? Balance and a card and it's a lot easier now than it was then. Don't get me wrong. For Anne Bowden banging on her desk saying you don't know how hard it is to get a license and whatever, but actually the beachhead was relatively straightforward. I think the slices of disruption that we're seeing. Vasily, you sort of touched on this a little bit earlier on. I'm not really sure how to describe Revolut now because you guys do so many things with insurance and booking and travel. You're not really you're in financial services, but you do so much broader than that, don't you? So, is that I always say, and going slightly off topic here, I always say no bank 300 years ago started with all of the complexity and all of the products and all of the things that they do. How much is what the success of players like you at Revolut down to doing something so well you get the opportunity to solve other problems for customers and more problems for customers and more problems for customers and then actually you're talking about super app territory and everything that goes with that. So it's an episode of doing something so well you get the opportunity to do something else, isn't it?
It's a good point, and I still have a lot to think about to well define the company and what we do to appropriately also motivate the teams and also even to hire the right people, because that's part of leadership, that you should be very, very clear, back to clarity and precision in defining what you're doing, but also not limit yourself, not to put yourself in the box, because once you do it, it's really hard to say then why are we going to be doing something else, right? You just defined us as, credit card company. So to me, the part of definition and part of magic why I believe the company is growing and is successful, and I'll knock on wood because it still takes a lot of hard work to continue on the same path. So part of it is we define ourselves and we define our success through customer experience, right? That's it can sound like not a big deal, but in fact it is a big deal. And I'm going to make a comparison to more traditional banks to show why it's not true. So the way we define ourselves is, again, we're a one-stop shop for anything you could possibly need to do with your money, right? Money is a thing. You need it in your life. It would be a better life if we didn't need it, but we do need it. There is lots of things you need to possibly do with money, right? You need to get your paychecks, you need to invest it, you need to spend it, you need to send it, like infinite number of things. You need to protect it with insurance. So as long as it's being done to your money, we're in that game, right? It's very simple and it's defined from the customer experience angle. Now let's look at more traditional banks, or at least how I understand banks and how they launch their products. Historically, banks have started with just loans, right? Back in the medieval Europe, I believe, or maybe even earlier. I don't know about ancient Greece, but some people had more money than the others, right? As soon as money was born, then people figured out, well, I have money, I can give it to you, and then you'll give me more money, right? So the trigger for the birth of banks has never been that, let's help those people. It was, hey, let's go make money. Loans make a lot of money, right? So credit cards are insanely successful products. There is lots of banks which just do credit cards, right? They just get so much money from credit cards, they don't even think about other things. Why do I need to offer stocks, mutual funds, all kinds of plastic cards? I have enough in credit cards. That's the best thing on earth. And those are the two different approaches to, again, building a company and building customer experience. Arguably, the first one is profoundly better in the long term if you do it right. Right? If you do it right, that's an important piece, because if you build much better customer experience, ultimately you'll be able to compete for a lot more customers, for a lot bigger opportunities, and to go for Apple-sized valuations, right? To get into the trillions and hundreds of billions, you have to be that company that A, clearly understands the customer experience, B, delivers them. And the problem I see with today's banks, part is historically they've been born to make money for shareholders, right? I'm unaware of banks that have been born with this thesis that customer experience needs to be elevated, improved, and things like this. And once this happens, vast majority of big banks are in fact quite old, right? Like they have not been born yesterday. Many of them are more than 100 years old, and they kind of have to pay attention to their reputation and brand equity. So they already have lots of what they see as assets, but I see it as a big liability. That's a big problem. If you could just throw it away and start from scratch, arguably it could be better for them, but they pay respect to this long history. We've been doing loans for 200 years. Like we're very respectable financial institution in this area, and that's, I see it as a big problem because that's not what makes you successful. And I'm thankful for this being the place for new companies to say, and we really do not have those hundreds of years history, and we're really thankful for that, and we're just going to do what's right for you in 2023. We do not care about what was right for you in 1723, for example, or 1523.
1723. I'm still paying off that loan. Yeah, it's a difficult one though. I mean, because actually, the word legacy, has very different connotations, doesn't it? Actually, a 300-year-old organization, the legacy of serving customers for a really long period of time. But to your point, it has the context of deeply held belief systems around financial instruments and how they're constructed and what their place is in a business. I think it comes back a little bit to what you said, Vasily, about. We could almost spend an hour just defining what CX, what UX really means, because I think in a challenger type organization, I think the way I'm hearing you define it is that it's all encompassing. It's what you do for customers, and that's a lot of stuff, right? But rather than actually the people who put, boxes into wireframes and design up screens, it's a fundamentally different thing, and that challenges not only the UI design or the experience that you deliver from the button noise or whatever. It's fundamentally like, how are you serving customers end to end? And that's a really big thing, isn't it? But I do think all of that, and at 11FS, we're big believers in jobs to be done. Like, we're a massive kind of believer in figuring out what people are really doing rather than just what they're doing with your product. And actually, if you really look at the market and really look at what the problems are, then you solve them in fundamentally different ways. And I do agree with you, Vasily. I think a biggest inhibitor predominantly for the way things could be is the way that they're done, particularly in big banking organizations. But you touch a little bit on Apple there, and it'll be I'll be interested to get your views on. Obviously this week everybody's getting excited because Apple are doing this and da 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 da. But actually, in the landscape of financial services, when we had the challenger brands, the fintech brands establishing better experiences, and to your point, Emma, earlier on, establishing the tech capability to continually evolve those experiences and continually deliver them. But actually, we've got now, Apple ain't bad at user experience. They're not bad at this stuff. So is the competitive landscape with what financial services good experiences looks like fundamentally shifting in that space? And Emma, maybe coming to you on that one, because that feels like I know in the UK market, we've seen a reset on what good NPS actually looks like in the market, but we're seeing that globally as well, right?
Yeah, the standard is constantly being raised. And it's in part because we've got more data available to us to understand what do consumers preference. Even, Vasily, I think you had a great line before, which was, we want to do what's right for the consumers, even if they don't know it, right? Data is increasingly telling us what consumers are unaware of or not consciously aware of. And so I think that as Apple and these other big tech players sit on a whole treasure trove of data, they're going to continually improve and use that data to improve what they provide, the experience, the holistic experience that they provide to their consumers. And I think it's incumbent on, fintechs, every company, to think, okay, how do I use my data in a more intentional manner to create, delightfulness? To use another Vasily term, to create delightfulness for my consumer, obviously with the underlying value. And I think folks are going to have to think about, how do they stay true to their core, so they don't head into a competition that is tough to win with big players like an Apple.
100%. Axel, what do you think on that one? The competitive landscape is shifting, isn't it? The players in the market are are altering, aren't they? And that dynamic is interesting. I mean, even back to like more traditional views on manufacturing and distribution, then such big competitors have a really interesting distribution advantage, don't they?
Yeah, completely, and that's definitely also something. I mean, having been quite involved in the deployment of Apple Pay a few years back, I can tell you that the banks are way more afraid of Apple and Google and the real big digital giants than they are from about us, because they know that these brands own the customer in a way that's in their daily life. I mean, if you Apple, you own people's life you have people's life in your phone. So it's definitely a way bigger threat for the banks than we are. Does that mean that they will? I'm just wondering how much regulated these big entities want to be. And especially Emma was talking about data, was talking about all of that. I mean, there's a fine line that they might not want to cross, being too close to the regulators we have to deal with on the day-to-day, which are not really the most friendly regulators, and that could potentially somehow impair their the way they innovate and change the way they have to behave, and that's potentially a line that they are really looking at not crossing.
Yeah, you can see people are really interested in the revenue and the profitability, not so much in all the cost of doing it. And that's an interesting challenge, isn't it? They're very much like swordfish dipping in and out of the ball of fish. They're in and out before they're regulated in that sense, aren't they? But I mean, Vasily, just coming back to you a little bit on the process piece. We good UX and good customer experience more broadly is not a point in time. This isn't a fixed thing. To your point earlier on, the conditions that we operate in today, the needs of customers are fundamentally different. Cost of living crisis, the post-COVID, unemployment, soaring in terms of the changes that we're seeing. I mean, the complexity of UX in a major part is really like being able to listen to the problems that customers are having and fundamentally having the ability to actually do anything about it in terms of actually having a product capability to deliver those things. One of the things I'm always starstruck by, if I'm honest with you, it's having run a design team at a big bank, is the ability to actually get things in the hands of customers. And you guys at Revolut can go from, a good idea to the market in hours, weeks, and that's amazing differentiating point back to what Emma was saying. I mean, how much of that is the critical piece in this? Is, this isn't just ideas, it's execution, right?
So all valid points, and I could not agree more than, again, you need to build the product for your customers, you need to listen to what they say, you need to adjust based on this, keep an open mind. So again, I'm not going to repeat those basics. I think there are some interesting points I could make, which at least are not as mainstream, and I'm not reading them all the time. There is a big difference in how different companies see, for example, part of themselves, which are responsible for hand holding the customers, right, and offering high touch customer service. Because a lot being said about engineering culture, there is a lot of inspirational stories, and again, Google, Apple, agile approaches, there is a lot being said on that. I don't feel like I can push the limit on that. There is already a lot. But there is a lot less sexy and kind of less talked about part of those companies, which is in many cases, 90% of those companies is customer service people, right? Customer support. No one talks about them, right? They're being quietly kind of never discussed. They're being seen as and thought of as a cost, right? They're being offshored, basically outsourced, and some crazy awful things are happening in those parts of the business. And in fact, I haven't seen open debates and some exciting discussions as much as I'm seeing about experience, right? Like AI, something great is happening with ChatGPT. Let's put ChatGPT in our app. But no, my recipe, for example, would be if you want to be catching up with more agile and lean fintechs, etc., maybe you need to look in that part of your organization, which is, again, generally not respected, right? Those people are not feeling great about those jobs. They're feeling more like easily replaceable employees. Their knowledge is not being incorporated in products, because arguably everyone talks about let's listen to our customers. let's run crazy surveys, let's start doing marketing and whatever. But you have thousands of people in your own company that talk to those customers every single day. They're free for you. They're, in most cases, they're disgruntled and quietly sitting in cubicles with all this wealth of knowledge. So part of my approach is just to unlock every bit of knowledge we have about our customer. Stop seeing those teams as cost centers. In fact, see them as revenue centers. Make them like the most respected part of your company and celebrate the knowledge and success that they have. That magically goes into a better user experience. That's part of our magic. I hope I'm not just disclosing any like secrets that stakeholders are not going to be happy about. But
we'll edit it out. Don't worry. Don't panic. It's fine. So.
Yeah, I'll be happy if more banks start doing that, because that was part of revelation I figured out for myself like 10 years ago. Something that, customer support is actually a revenue center, not a cost center. It's a huge cost component. It's billions of dollars for all the banks, like at least hundreds of millions. So it's natural to see, okay, how we can move this team to a lot less paid location and start hiring even more junior people to just cut the cost. That takes you to all sorts of bad decisions, right? It takes you into bad culture, bad skill sets, etc. But as you realize that, in fact, if you start doing this thing right, those customers will be excited. They will say that, I had problems with my loan. The support person helped me and they helped me move it to a lot lower interest and whatever. And then ultimately your viral ratios will go up. Your brand strength will go up. And you will see so many magic things on the positive side of your business, which is revenue going up and profitability going up, that ultimately you'll be able to make good decisions. So you asked me about digital, I kind of flipped it because I feel like there is so much being said about digital. I'm not going to be the one to preach on that. There are a lot more reputable people talking about that. But I see a huge opportunity to talk about unsexy things, which are 90% of your organization is customer service, which knows everything about what your customers want. And if you go talk to those people, they generally feel not respected, not listened to, and generally not excited about their jobs. To me, if I want to make impact for free, that's where I immediately go, right? I just want to make sure that my customer service organization is the most respected in the business, is being listened to on a day-to-day basis. And then I'm not wasting my marketing and research dollars, for example, to go directly to customers when it's too difficult, right? Not always, but when it's too difficult. But instead, I'll talk to my people. So that's part of a UX approach, which is free for everyone to use.
100%. If Jason Bates, co-founder of 11FS and co-founder of Monzo and Starling before that was here, he would echo that 100%. I don't know if I'm giving away a secret here from his perspective, but basically he talked to a big bank when they were founding Monzo into letting him go and listen to calls for a day. And they basically just built stuff that stopped people having to ring up. And that was it. That was the early day of what made Monzo successful. And as you say, it's unleash that talent. I imagine there's a lot of people from big banks listening to this is going to go give somebody in a call center a hug later on, because I completely agree with you if you can make that happen. Rapidly running out of time here. We've had a great discussion. If we look maybe out of the next 5 years, how does this play out in terms of UX for big tech, big banks, fintechs? What do you think is going to be the standout thing happening in 5 years? Maybe Axel, if we go with you first.
I think there's going to be more and more services where the UX principles and the innovation will start happening. As you said, payment and payment accounts and our beachhead, but I think there's going to be a lot of innovation in credit and all of the more complex and more structured type of products. And potentially Emma mentioned it, but AI in terms of creating better UXs, helping iterate faster the way, because I think we didn't mention it, but one of the big advantages that the Revolut and we have is also our legacy. We don't have legacy, so we can really iterate fast on, and when we listen, we can fix quickly, which is something that the banks can't do. And if we fix it the wrong way, we can fix it the other way the day after. And we do a lot of A/B testing and things like that. Which, if we could automate all of that, which is honestly not the best usage of our software engineers, and if we could have AI learn automatically from the interaction, the digital interaction of our users, there's probably a lot of interesting improvement that could come from there.
100%. Vasily, what do you reckon? 5 years out, where are we going to be?
So 5 years is easier, I guess, to predict than 50 years, but unfortunately, there is a chance you're going to check me by 2028.
Yeah, we're going to get you all back 5 years from now and just be like, man, you were way off. But
So I do see different events happening in US and Europe. I don't know if the podcast is specific to Europe or more global, but I see, for example, in the landscape of the banking market, for example, US has just thousands and thousands of banks, right? We've seen many of them failing recently. There is lots of, well, not many, in fact, very small numbers compared to just 2019. I thought there was like 20 failures and everyone was silent. Now, suddenly 3 banks failing in a week and everyone is crazy about that. But I do see, like, at some point, consolidation should be happening in a sense that it gets easier for people to move their money out of the banks. We've seen that in Silicon Valley Bank, right? I expect that to be happening more as interest rates are going up, because first I expect some of those 5 years to be tough in terms of interest rates are being high, right? And high interest rates create issues because US national average, and sorry again for talking to you about US, I'll move to Europe in a second. US national average is still like more than 10x lower than the Apple's rate that was launched yesterday, which is 4.15, right? Which is still like lower than 5.2, I believe, the rate that was set by the Fed. But the banks will not be able to sustain those rates much longer, right? So people will be moving money out, right? I'm adamant about not keeping my money even at 3%, right? I make sure that every dollar is earning 4 or 5, like the Raven banks at 5. So I see this happening a lot in 23, 24, 25. I don't expect rates to go back to zero within those 3 years, which means I expect a lot more banks failing quietly. Like instead of just failing in a sense that being shut down by regulator, they'll be quietly merging with bigger banks. They'll be quietly kind of exiting the market, moving into it. So I definitely see this happening. I don't know if the US is going to end up with 1,000 banks, 3,000 banks, but I think 5,000 is just ridiculous. UK, it's another interesting piece, which I find it astonishing about banking industry overall. I thought UK, my friends told me, has like 50 meaningful banks, right? Maybe not 50, maybe more, but definitely not thousands and not even hundreds, right? Some small number. And UK is a smaller economy than the US, but not by a factor of 2 orders of magnitude, right? So it's roughly a couple of orders of magnitude smaller than the US in terms of number of banks. So I wouldn't expect huge consolidation there because that's already not too much. And again, you know better the other European markets, whether they're more like US or UK. But what I expect them to actually become a lot more thoughtful on how they move in terms of improving customer experience. And I see acquisitions actually is generally a good idea because first you try it on your own, which is kind of happening now, right? They realized challengers appearing in 2010. They maybe started doing something in 2015. Maybe now they kind of about to evaluate the return on those efforts and investments. And I would hope they generally consider those returns awful, right? Like they haven't delivered yet good results. Challengers are growing even faster. So that should trigger conversations in the boardroom. Are we going to just do the same thing second time? Or we're going to bring in the people who have done it? And I hope to see again those 50 big banks in the UK acquiring someone for themselves, which means for entrepreneurs, it could be a good time to now start doing something. There is already plenty of successful fintechs, but less than 50. I see opportunity for startups. And I see opportunity for big banks to bring in the internal talent by acquiring those companies, by making partnerships with them, and ultimately drive customer experience. So that's my forecast for 5 years, if you will. It's not enough to materialize in 5 years, but I see this starts happening. In US, I see failures definitely happening for smaller banks, and I see interest rates of 0.4 not sustaining for much longer, right? It's been like 0.4 national average is just not going to exist for too long.
As you say, consolidation's all round in that sense, but I can definitely agree with that. We'll definitely have you back on to see if all of that comes true. But Emma, what do you reckon? I mean, you touched a little bit on things like ChatGPT and artificial intelligence, and I mean, a lot of what Vasily was talking about there is like still people manually having to move money around because better saving rates from these people or whatever. But you know, in a world where algorithms are running more of financial services, then I kind of want somebody to be doing that stuff for me, really.
Yeah, you know, I probably agree with a lot of what's been said, but the caveat that the U.S. is a slightly more complicated market because of the 50 states, and you've got to have money transfer licenses. So I think you're right. You're going to see consolidation, but maybe not at the scale you've seen it in Europe, where there's much more free-flowing ability across borders. And, you know, in the end, payments and finances are still complicated and still heavily legally and government run. And so I think, you know, a question that I've got is how quickly the government in the US and Europe catches up to what's happening, right? How much are they concerned at the fact that the SVB bank run happened in 2 days versus the last bank run that I think happened in upwards of 100 plus days because it was the sheer ability to access those funds immediately. And do they actually put more sand in the gears than remove it because it's creating, could it have, a ripple effect? So I'll be very curious to see how governments look at some of these events and take action or don't. And then kind of the other theme that we're starting to really think about is the fact that people are making fewer and fewer conscious decisions, just as I was talking about with AI. It used to be the case that every time you went to a till, you pulled out your payment method, whatever you wanted to pay with, cash, card, put it on my, bill. Now you're making that choice once. When you load your card into an Amazon, into, any number of retailers and or, utility providers. And so, and we're also seeing that moment of truth kind of happen at the very beginning. And so we're really talking about kind of going from 2 to 3D to 0D. Just, you don't even make a decision anymore. You're not interacting with screens. You're not interacting with anything. And finance has truly disappeared. Going back to where I think this group originally started, which is you don't want to be in your financial app for a long time. The question then becomes, how does that app evolve and that interface evolve if people are making fewer conscious financial decisions?
Yeah. I mean, I think that's fascinating. I feel like we could probably go for about another 5 hours on every one of your closing statements between the two of you. But and we'll definitely have to have you all back on to kind of unpack those things. But more, the thing I'd sort of say is ain't it great to work in financial services right now? There's just so many amazing things happening on all fronts, in all slices of financial services. There are just amazing innovations happening. And it makes it easier to get out of bed, doesn't it, for sure? So on that note, we're going to have to wrap up this edition of Fintech Insider Focus in associations with our friends from Visa. Thank you so much for joining me, panel. Where can people learn a little bit more about you and your companies? Emma, starting with you.
Go to visa.com and, learn there. We're everywhere you want to be, I guess, is really the gist of it.
Perfect. Axel.
Spendesk.com, and we're on Twitter, we're on Facebook, we are quite present on social media.
Very good. Vasily, where can people learn more?
Simple answer, go to Revolut.com. A little bit of funny answer, which I appreciate, as you could tell. I can put a referral link to LinkedIn, so I can make $100 of you if you join from my link.
Everybody's got that little side hustle, haven't they? Referral fees from me. As for me, you can always find me lurking predominantly on LinkedIn these days. Feel free to connect. Happy to chat. Thank you so much for listening. If you like what you heard, subscribe to the podcast and don't forget to leave us a review. It helps us make it better and helps other people find the show as well. For more on this discussion, look out for the next episode of Fintech Insider Focus in 2 weeks' time. But thank you very much for listening. Goodbye.